Good morning, everybody. Welcome to the Flow Show, Tuesday, the 4th of June. And lots going on again this morning, not least from the Bank of Japan dropping headline bombs just before the Flow Show was starting. Morning, Kay. How you doing, mate?
Hey, good morning, Ryan. Yep, all good. Thank you. Good morning, everybody. Let's rock and roll. Ah, we lost Ryan.
Hello. You got me all right?
There you are.
Yeah, cool. Yeah, lots to get through. So we'll start with with Japan, as there's lots to speak about from there. First of those headlines, the BOJ is said to be looking at reducing bond buys as early as its June meeting in a couple of weeks. That was a sources piece being dropped by Bloomberg. According to the source, it has no intention, though, to surprise bond traders. But it said it's going to watch markets till the last moment before deciding. So I don't know how that computes. Kay, how are they going to not surprise the market by waiting till the last moment to surprise the market? But I guess it's not a surprise now. We've had this source.
Exactly.
5 trillion yen is the.
Don't surprise the market, but wait. Yeah, don't surprise the markets, but announce it a week in advance.
Yeah, exactly. I think it's 5 trillion yen they're looking at as their sort of, as Mark called it, QT micro light.
Yeah, I said mini, but then a couple of people in the room tried to find smaller terminology than mini.
Yeah, exactly. So anyway, that's a sources piece for the BOJ. I don't think we know it's coming, so it's not really that much of a shock to the market. I haven't really seen any expectations for size when they do start QT, but obviously they've got a hell of a lot to get through.
Well,
the QT front.
the yearly redemptions, as I've been saying, I think on here as well, are about 72 trillion yen a year. So there's 6 trillion a month. So reducing it they've reduced it already in May, and they decided to keep the same amount for June. That's the announcement for June. So any reduction will probably go live in from July onwards, because they already announced their program for June, which was unchanged from May. So if they reduce it to 5 trillion, that's going to fall short. So it's a certain form of QT. But I think the interesting one as well to watch there is look at the combination when Bank of Japan announces their reduction of bond buying, and then with the combination of that budget coming in, because then we should know how much the government needs to borrow, right? So the combination of both should be an interesting watch. Perhaps a bit, for the time being, a bit, how shall I say, one for the future. I wouldn't trade on the back of it right now.
Yeah, because despite how much they own, I read somewhere, I think a while ago, that their average maturity in all their bonds is about 7 years, which in Japanese terms isn't a long time for them to just sit and let a lot of it roll off rather than actively sell it. But as we know, everything with Japan is a slow process, so it shouldn't create any ripples too much unless they really sort of step it up and surprise on the hawkish side, I think. Right, who else? We've had a couple of other BOJ talking heads out. Ueda says that if underlying inflation moves as we project, we will adjust the degree of monetary support. That inflation, though, isn't moving in the right direction based on the last couple of months' reports. Says we are ready to conduct nimble market operations if there are sharp rises in long-term rates. BOJ's Himino was trying to shoot his own feet off today, saying that the bank lacks the data on the effects of rate hikes. Again, as is pointed out in our room, they've had long enough to work out what the possible effects are, but according to him, they have no clue. He says several measurements we look at all show underlying inflation still short of 2%, but gradually accelerating. toward that level. We need to look not just at price data, but various factors like wage and corporate behaviour engaging underlying inflation. I'm quite surprised those comments didn't see yen pairs moving higher, but there's seems like there's bigger things going on at the moment, a bit of risk off coming into the market. Finance Minister Suzuki said they conducted FX intervention to counter speculative moves, and that intervention had effects to some extent. He's also concerned about the significant cut in auto output. Several of the big Tokyo automakers have had to halt exports of vehicles due to failures of passing certification. So that's going to impact things like industrial output, manufacturing moving forward. So we should probably look to be seeing something in the following numbers over the months ahead. PM Kishida says he's not going to call a snap election during the current Parliament session. That's according to Asahi News. They also report that Japan is planning to maintain its fiscal year 2025 primary balance target. And another headline says that the government is going to warn about the weak yen pain in its next policy roadmap, which is going to be coming maybe as early as June or later on in June. Still with Japan, the Qatari Sovereign Wealth Fund is going to boost its investment in Japan, according to Nikkei. It's going to take around a 5% stake in a semiconductor chip maker, Kokusai Electric. Not a huge amount. Well, I say not a huge amount. I'd like it. 70 million is the investment there, but it could just be the start of further investments into Japan. And Japanese Transport Minister Saito said that he's hearing from automakers that they are considering increasing production of vehicle models that are not affected by the certification irregularities. So they're going to try and plug the gap there. Right, coming over to some data. Swiss CPI out this morning, about the only half decent bit of data we've got. Coming in as as prior on the year-on-year 1.4%. The monthly number coming in at 0.3%. I know a few in our room were looking for a little bit of a softer number there, Kay.
Yeah, well, you know, we still haven't given up completely the lower Swiss franc trade right now. Although we also acknowledge that with everything going on in Mexico, South Africa after the elections, there's a big unwind of carry trades going on as well. So we're very cautious. Yeah, disappointed I wouldn't say about the number. A bit too high for our liking, but yeah, I mean, the overall sentiment in our room is that we are going to get one more cut by the S&P this year. It shouldn't be much more. They are already lower than the others, right? Higher than Bank of Japan, but lower than all the rest of the majors. But we're just looking at a few levels where it'd be possible to get perhaps a little short Swiss again once those heavy carry trade things are perhaps out of the way. It didn't give us much food to start initiating anything new. But it's not ticking higher. Yeah, there was a little bit of a risk that Jordan also mentioned could be a little bit stickier for longer, but the core came off like a tick or so. But yeah, I think a number that's not going to move the goalposts too much, all in all.
Yeah, very much so. Over in the UK, we've had some BRC like-for-like retail sales out.
Brian, can I just interrupt you for a second? You're not sharing any screen yet. Is that normal?
Oh, bloody hell.
No, okay, just...
There's been a rush this morning.
Yeah.
It was me looking at Swiss pairs, and no one can see it. There's the Swiss data anyway. Yeah, as I said, there's some BRC retail sales out for May. Year-on-year numbers showing softer than expected, 0.4% versus 1.2%. The weather already being blamed for that. A bit of a soggy May. So that's to be expected. We've got a bit of a soggy one, retail sales for April. So May is maybe not going to be that much better, though we did have some bank holidays in the middle of that, which may have boosted some spending for that. Over in the US, looking back at the data yesterday, a bit of a mixed bag, really. Manufacturing PMIs, the S&P manufacturing PMI showed a gain to 51.3. So that was a decent improvement over the flash number, 50.9, and higher than last month as well. New business returned to growth. There were faster rises in production. Employment grew for the fifth straight month and at the fastest pace since last July. Input costs hit a 13-month high, although selling prices slowed to a 5-month low. So some positivity from that one. Price pressures remain there. Canada, that PMI there coming in at 49.3. Was expected to move into expansion. It actually went backwards in the end. Now, this one has been in contraction since the May report in 2023. So it's running now for a year where this number has been soggy. Prices data also showed an increase in input costs, but the slowest pace of output costs for nearly 4 years. So a bit of a margin situation going on in there, but overall the report looking a little bit bearish in terms of activity. And then we got the ISM after that. And again, a real mixed bag. We saw the previous month, we saw employment really cratering into the negative, down to 48.6, and it jumped up. Was expecting to fall even further, but it jumped into expansion, 51.1. But on the other side, prices number that had a huge jump last month to 60.9. That came in softer than was expected. So a little bit of reversal in both those. That suggests some maybe some one-off factors in there. However, the bigger theme is that the headline number came in worse than expected and lower than last month. This is now the second straight month of contraction numbers there. New orders as well coming in much softer than expected, and also the second month of falls for that. So the big picture to take from that is that activity is potentially waning, should we say, in the manufacturing sector. As I say, 2 months on the trot now, we're seeing those negative numbers. So that's something that the market really jumped on yesterday, as opposed to the prices and employment data looking strong. The same old thing, Kay. Market taking anything to hit the buck a bit.
Yep, that's it. I mean, we know the market loves to sell dollars. We know the market is desperately looking for that turnaround for weaker data, and every time we get some, there's a wave of dollar selling, right? It's just the way the way it is. You remember the movie Desperately Seeking Susan, where the market is desperately seeking for a weaker dollar still. But the issue with everything, and we will know, of course, because we are in an employment week, and this is going to be a very important week. And tomorrow, is it tomorrow, right? That we've got the ISM services.
Yeah.
So we are going to have that information as well tomorrow. So it's a pretty important week, right? And I have to say that yields are not keeping up. So the bond market is also looking for that series of weaker data now to start to come in. But yeah, I mean, it's still a mixed bag, because if you look at okay, the prices are coming off a bit. And the new orders were a little bit worrisome, right? But then the employment index back above 50. So, and then add to that the FX volatility environment on the option side is still not the one that is really telling us that things are going to explode. So you've got that move, you've got the move yesterday through that resistance in the euro dollar. Let's just take the euro dollar as an example, moving up into the 109s, and then what happens? Well, you find the option fellows on the other side and countering the move, and it's going to take those data that we have. We are seeing yellowy flags, right? I mean, we can't ignore it. I mean,
Yeah.
we are seeing yellowy signals in the US, but not nowhere near the red flags, right? But it could be this week. Who knows? You know, I'm I've been a dollar bull for very long, but I'm not completely changing my view yet. But I'm very cautious. I am actually a little short dollars via the Kiwi, but yeah, I mean it still needs confirmation to me. Huh?
Yeah, exactly. UBS still see two cuts coming from the Fed. Said the market is not assessing the risks of cuts as it should be. So they still expect two Fed cuts this year. When they're going to come is anyone's guess, if they come at all. But they're sticking to that line. Thankfully, we're devoid of central bank speakers as they're all in shutdown, lockdown for all their respective meetings. So we've got nothing on that front. I love this time of the month where there's no waffling from those clowns. But on that means I haven't got that much more left in the news. So nothing else to give. Anything else you've got on your radar, Kate?
No, I think we can move over to the prices because it's actually all directly related right now about the makes, the rand, everything that's going on.
Yeah. So I mean, what's going on at the moment? Because it
The
seems like
big
we're in a
unwind, my
bit of
friend.
a what?
It's the big unwind. The big carry trade unwind is ongoing. Well, I mean, another round of big carry trade unwind ongoing, and that's this dragging everything with it now. It started with a 1 day move. Well, we had the first move after the South African elections, but then the move in the mix is completely related to the potentially full majority that the Morena party is going to get, and I'm already saying that they are now in a position to push forward with those. Um, Not, I mean, yeah, the market calls it, and it is true that they are at risk of being very hard anti-investor or anti-foreign investment and anti whatever measures incoming, and the investor community really doesn't like it, and we are seeing a massive move out of the carry trade again. Yeah, makes as weakened what about 6 or so percent since the election result.
Yeah.
It is to be expected, and you know, as carry trades that have been put on for months, if not years. We've seen hiccups in the past. So I do think that there was a bit of already on prior spikes, a little bit already of unwind, but I think most were still in place, and now the market is completely going the other way around. It is a danger, you know, but we still have to see if they really are going to be as bad as the market is now painting it, you know. I haven't looked back into the details, so don't ask me exactly what it is, but there's going to be more spending for Pemex. There's going to be potentially stopping foreign exploration, new digging and things for oil, and there could be more spending money going to because they are a populist party, right? More
Yeah.
more taxation on the rich, and et cetera, et cetera. So it could be a bit of an ugly picture for a while. Now we still have to get those final results for one, and for two also knowing exactly if they're going to press forward with all the anti-investor measures, right?
Yeah, but I think we have to make a distinction here between carry traders and investors, because they can be a little bit the same, but they can also be very different. When you're talking investors, you're talking about people who are buying or investing into firms, into property, into various programs in Mexico, assets and that sort of thing. They're not necessarily the same as carry traders, okay, who are
Oh, no,
just sitting in
definitely
the
not.
trade to earn the carry. So yeah, this, if you look at the carry trade, if you take it from here, if you take it from this move here, there's no real carry traders from this period who are going to be that worried about this move. All the short termers who maybe are in here are going to be worried about it, and that's probably what we're seeing. But there's enough cause to say that carry traders won't be overly worried just yet, but and so this could be more an investor move in the interim. But things start somewhere, and if this is going to be a bottom, then we're going to see some upside. But how do you judge that? Well, you can judge that by using various technical analysis on your charts. That's why I like the fibs and the longer term fibs like this. If you just take this leg from November 2021 down to here, the 38.2 comes bang in line with a huge area, 1850. This was a real doozy when we had support there. We came down, we had support, we faffed around a bit, then we broke it, held it, and then we had that big hold late last year. So this is going to be a big area. And this is the sort of thing that probably carry traders are going to be looking at as well. If this trend is going to be breaking, then these are the levels, if they start breaking, where they're going to get worried, and then you might see a bit of an acceleration as more carry traders fold. But then if you take the bigger trend, the 38.2 isn't until nearly 1990. So that's it's a huge distance still to go before that trend starts, the bigger trend starts to break. So if you're trading this one, it's easy a bit to get caught up in the noise. And yes, this is very volatile and there's big moves happening. But if you take a wider view, you can take some of that fear, if you like, out of trading this one and just watch your levels. If at the moment we're holding 18, we got up to 1799.99 something, and we've held it. If that breaks, then this 1850 is going to be hugely important. It could, if it becomes a top like that, then that's when all your investors have probably done their thing. The carry traders are thinking, okay, well, that's enough. We can't get through there. And then maybe they all come piling in again. But I think they may come in with just a little less enthusiasm for the moment, just to see how it all unfolds.
Yeah, I'm just exactly. I mean, he said, Rick, saying that LatAm investment, it's only a small part, of carry trade. Yeah, that's what I mean. I mean, now we have to see. I mean, carry traders, they are going to probably panic a bit, because the carry trade is something where you actually, I mean, of course, this has been an ideal carry trade because you get a lot of interest, and the currency has been strengthening. So those carry traders, especially the more shorter or medium term ones, they are going to be a bit panicky right now. But longer term investors, they will still have to wait to see exactly what AMLO and then Scheinbaum are going to do. But whether it's cheap to invest in LATAM, Rick, will depend on how easy you can invest your money, and then, but especially get it back out when you want to get it back out. Because there's a lot of places where it's cheap to invest, but if you invest and you can't get your money back out to take profits, then it's not a place where investors want to be, however cheap it may be. But there is still the small feat of the nearshoring or the friendshoring as well. I mean, let's not forget that there's still a lot of trade with Mexico, and that is then going to be considered more for the more medium term, whether those people are still going to be as positive towards Mexico, for instance, to continue to trade, keep the money there, invest in factories and stuff like that. So I mean, the carry trade is one thing. The investors in a country, it's a different thing. But for the carry trade, I would say, like, what we see right now is probably, I'm not going to say it's over, or it's taking one more day. And we don't know. It all depends, because it's a big one, you know. I mean, Mexico has been bought against virtually everything. Call it yen, Swiss, euro. I mean, there's been a lot of different forms of carry trades going on. So that it could take more than just a little 1 or 2 days to get out of it. But I mean, the investors, that's going to take weeks or months, perhaps even to decide, and that's where your longer term move will then come from.
Yeah, very much so. But I think the wind has definitely shifted in this one, and it's going to probably stay shifted for quite a period of time. And we haven't even factored in the central bank. You know, the central bank might put them on pause for a while, because they want to see what's going to come from the government, because some of their reforms policies could be inflationary, or vice versa. It could be heavy on the fiscal stimulus, i.e. easing. And that might be a bit negative for things. So they may have to get in line and ease to help the burden of extra borrowing. Who knows? So there's a lot of uncertainties been injected in. And again, you know, the central bank and rates is one of the reasons why carry traders are in. So they're going to be watching those meetings very carefully from now on, just to get an idea. And that could drive moves later on. Anyway, let's move on from that one. Talked about that long enough, I think. So yeah, we got a bit of a drag. We had euro dollar breaking above the 109 area. Looked like it was going for a wander. Didn't get very far. Got to 109.16 according to my chart. So not far at all before we've had this little bit of a pullback. Again, it's looking like a bit of a risk-off move, because cable's doing the same thing, and the dollar's getting sold off pretty much everywhere among the majors, except for dollar CAD, which we'll look at in a second. But as you can see, for now, that little pullback is holding the top of my zone, which potentially keeps the upside in play. But again, is the market going to want to push things too far ahead of the ECB? But as I say, with this one, it's looking more a dollar move than anything else. As mentioned, cable had a little pop above 128, pretty much following what happened with the euro. So you can see, again, it's looking like a bit of a dollar move. We've pulled back to this 127.50, 60 area. It's a bit of a short-term area. We've had some highs and holds here before, so I wouldn't be surprised if we find a bit of support there. Else we might be looking at 127s and these couple of dips below, down to that 75 area, 80 area. So despite this failure, I don't think we're done maybe with this level yet, but it's going to take something to turn it around. As mentioned, dollar CAD is looking fairly strong. Whether this one's finally decided to go for a little bit of a ride on the oil bus, because obviously we've seen a big move lower in oil the last day or so. Maybe a bit of, obviously, Bank of Canada influence coming into this as well. Market, again, not really wanting to push any of these big levels, but we'll have to wait and see what happens with this one. This one's a bit of a surprise that we're not seeing a bit of sell-off dollar side on this one. Kay, is this one mixed in with the commodity space at the moment?
Yeah, yeah, I think so. This oil thing and pre-BOC. I guess the two things are at play now. Market's probably thinking, oh, oil is lower. That's one thing. Also, I mean, a bit of driven by that people getting out of the carry trade. It weighs a little bit of risk as well, right? And that is perhaps at play as well. And then we've got the what if the Bank of Canada cuts, you know, and I think that is now really at play on in the Canadian dollar, and I wouldn't be surprised if we don't get any majorly negative dollar news that we trade back up to that 137.40 before we head into into the Bank of Canada. Yeah, the global picture is that it holds those low 136s as well, and I think the market doesn't or did not want to push and couldn't push because of world dumping and other factors. And so now we see this rebounds, and yeah, the rest is pre Bank of Canada, I recommend.
Yeah, I'll be pretty interested in this one if maybe oil stays low but doesn't push lower, and we get a little pop up towards the high 137s, 138 on the BOC. Because if we don't get through there, I might be itching for a bit of a short up there. Just to play the range.
Yeah, I've got my 137.5 call in. That was a little bit of a Bank of Canada play to start with, and now I'm getting a little bit of help from oil. Been trading a little bit around smalls on the hedge, but yeah, would be fun if they cut tomorrow. By the way, is there a press conference? Because it says somewhere on one of the calendars, it says that there is a press conference after the Bank of Canada rate decision tomorrow. The investing calendar.
I don't know. I don't think there was one up unless it was a monetary policy thing. Let's have a look. They usually pop it up.
It is on one of the calendars, but then
there is. Yeah, webcast. There is.
Yeah. Okay. So then there is you. Okay. Thanks, Chris.
Yeah. Okay. So we get to hear from Macklem. Oh,
okay,
bloody hell. It means we've got to sit through that crap for.
Yeah, a bit of a fight with Rogers coming up, I guess.
Yeah. Hopefully in a swimming pool of jelly, they'll make it interesting. Let's not go down that road, or we're talking about the Gimpos and the Guard and Yellen and all the others. Anyway, well, that's a little bit of a private running joke we have in our chat room. But yes, there's a presser tomorrow. I didn't think there was one, but there is. So yeah, we get to hear from those guys over there. Excuse me. So that should be interesting. Right. So as we've been looking around, I mentioned oil. So have a quick butchers at that. Looking at WTI, it's had a bit of a breakdown below this 50 fib again, but it's holding these lows that we've had before. So that's going to be, as I said, that might put the brakes on what's happening in the loonie. But Brent's a different kettle of fish. It's had a breakdown through a sort of similar area of lows, and that's really sort of the floor's fallen out of that one. Likely this is more driven on the OPEC stuff, where they're not really changing anything. They're going to phase out some of their voluntary cuts, people wanting higher quotas and the like. They haven't got the demand side of things there. There was that interesting comment from the OPEC Plus lot that they're waiting where they're waiting on rate cuts from central banks as well as everyone else to help, spur demand a little bit. But as you can see, we're down at this old 50 fib. We've been here before. It's a bit of a support area. As you can see there, we've had plenty of action down here. So looking like it might want to break here. If it does break here, then we could be heading all the way down to, towards the 71 mark and another decent area of support. But I don't know if we're going to go there all in one go. That's a big old area down towards that 71.5, 71 area. But it's already done quite a few bucks now, so another 4 or 5 isn't out the realm of possibility, shall we say. But that's the level at the moment. We'll see where resistance comes in at this break point. Gold as well, looking a bit weaker, maybe a bit in sympathy with what's going on elsewhere. Not really putting in a test of the 2300 level just yet, though. We've just come a bit shy around the 13-14 area. So we get to see if that's tested. We've got the 55 DMA coming right in there, pretty much near enough the low, according to this chart. So keep an eye on that one as a bit of support now. But otherwise, we're in a bit of wait and see mode. We haven't got that much data out today, if I recall, in the US. What have we got? Well, we've got the ISM. No, I'm talking about my arse. ISM's tomorrow. We've got factory orders and jolts. That's about it. And we've got the revisions to the durables. So not too much. Sorry, Kay, what would you?
Yeah, no, I said jolts, and jolts have been an excuse to do something in the past. But if it comes out in line, I guess we are going to have to wait for tomorrow to see stuff on the book, perhaps again.
Yeah, but we are in that mood. So even if it is a little bit of a wobbly one, and factory order a little bit of a wobbly, it's probably going to give the market another excuse to tap the dollar again. So know which way the winds are blowing at the moment. Kay, do you want to have a little look around?
Yeah, quickie. Just perhaps look at a couple of things, and I'm going to pull up the yields, because since we are in an employment week, well, every data point is important, and we've got those ISM services tomorrow. Rates are going to be important, okay? And we are hovering in between expectations on the two. This is the short end, right? Which is the closest to for market for the ease of the market understanding, closest to the to Fed expectations, and we're hovering in between the levels there, in between the 2.5 and 2 cuts right now. I think there could be, or there should be at least, some form of decision over towards the combination of all the data that we see this week. So either we are going to get back and trade closer, back up to the 5% in the twos, or we're going to go for a walk below here, and then we could do another 20 BPs lower, I think, over the course of the week. More would be perhaps a bit of an overshoot, but be careful, because the market can be a bit volatile in even the bond market these days. Is they can do those 20 BPs quite easily those days. So already watch out tomorrow or over the course of the week what's happening around 475 in the short end, and then where we are ending the week, whether it's close to 460 or 5% again, okay? The 10s, a bit similar. We are in a bit of a zone here, yeah? Between 435 and 440. That could be our neutral level, sort of. And then towards the end of the week, we will know whether we are much closer back to the 420, or if we get all the way back up to 455, 460. That 455, 460 is probably the gateway to higher if we get very stubborn US data, or good US data for that matter of fact. Okay, so those are the levels on the yields that I'll be monitoring. And for Ali, yes, I can go back to the dollar CAD for you. I think I'm going to take this line out, because we are really pushing up and down through the line as if it was nothing. So taking this one out. It's a yo-yo, but every time we get under that 136 2030, we're starting to run into bids. Okay, so this is still your big level on the for the foreseeable future, I would say. So 135.90, get under there, then it's probably going to get much lower. But looking at oil and looking for what we expect for the Bank of Canada tomorrow, a possible rate cut. It's not a done thing yet. So that is if they don't do anything, and if oil turns around, that's going to be your big support zone. Top side, there's a possibility we get back into this. Well, this is the small intermediate level, but it hasn't been traded that much. I'd rather be looking at anything here along those trend lines, 137 and a quarter-ish, and then on top Of course, those levels 137.40 where we stopped the other day around the 78.6 and then 137.5, high 137s then, okay? So this is where you trade your dollar cat. I think in between, there's not a lot you want to trade in between, okay? Because it's actually fast enough. If you look at this, it's actually fast enough to be patient and wait for levels to trade, okay? You're short on the Dow. I actually don't trade the Dow at all. But I caught a little knife today on the, where is it? On the S&P. I I must say, and well, sometimes it happens. I underestimated the weakness of risk a little bit today. But we will see. To me, there's some big levels on the S&P, which is just around 5,200. We went a little lower, but look, it still held the trend line sort of. And intermediate, I think we have to respect that 52.40, 45 again here as well. We are not miles away, okay? Top side, yeah, this is going to need a break above 5,300 again to get moving to 53 and a quarter, 54, 53 and a half. I do think that once, but I don't know when. I do think that once we are done with all this risk, unless we get massively bad US data, in which you are going to have a very nice position, Ali, because if we get really, really bad data out of the US, your Dow is probably going to to tank a little bit as well. People may try to buy a little bit of stocks because yields are going to come up, but I think we are entering a period now where really bad US data are going to be bad for risk and equity markets as well. In the meantime, if we get still soft landish data, like gentle slides, perhaps this one could still do okay. That's what I'm still thinking right now. But if we get below 5,200, all bets will be off, in my opinion. So yeah, we were looking at those that Swiss thing this morning. We've got to be a bit careful, though, for those who would like to counter trade it. I think we need to be a bit careful because we are below the daily cloud. We are seeing related to those carry trades unwind. We are seeing like quite a bit of weight on all pairs, yen and Swiss related. So the daily cloud comes in at around 1589.60. That is going to go back up at least on a close, and ideally back below that prior low here to start turning the ship around. I think there is a possibility that before all of this is over, that we are going to have a look at those levels here that we had in the past, which is high 88s. All right, I think it is in the possibilities. 88.90 with the 200 DMAs or 88.80. Just looking at the comments. Okay. Not ready for butcher's glove, brand. No. Sometimes we have to let the butcher's glove in the drawer, mate, for a while. Also, Euro Swiss, interesting move. It's all related to those things. A bit of warnings last week from Jordan. Okay, but we had a little bit of a shot up this morning on the back of the CPI. A little bit of a move. Well, a small one higher. But this also, for as long as we are below 97 and 3/4, for those who would like to counter trade any Swiss strength, I'd still be patient until we get this back and start to move higher again, because I do think that there is a fair chance or possibility that we are going to have a look at 96 3/4 here, which was the other level from where we had a bit of a scare here, and then from there on it was a bit of a springboard to go and visit those highs here. I think it's still within the possibilities to get a test down here. And I'm not going to keep you too long, but we are retesting. So For the nth time, we tried to break yesterday above this 61.45.55 on the Kiwi, and we are retesting again. I am giving it a try here, but I won't be too. I won't be how should I say overconfident either. I mean, if it goes back down below, I'm going to be out again. It's no need to really fight the dragon too much because very few came back and many have tried. So that's it for me for now. Actually, it's all trying to go and then failing. Yeah. Aussie door, interesting one because we stopped right ahead of the 67 level. There's a bit of trend line resistance to get through for the Aussie to continue to move higher. In the meantime, we're already back closer to the well, we could call this neutral, right? But still keep a close eye on what's happening at 65.85 figure if we ever would go down there. Ryan already did the gold, but I think we're in a range here, Joao, and I'm still looking at this 23.15, 23.25 to be the level to monitor. If we get below and we hold, then it's going to test 23, and why not below? But let's wait for those US data first to come and then decide what to do. We need to get back above 23.5 and hold to continue to push higher. And with that, Ryan, back over to you for today, my friend.
Thank you very much, sir. Good stuff as always. Thank you to all you guys and girls for coming to the Flow Show. Thanks for joining us. Hope we're doing you a good service here. Let us know. If not, don't forget to give us a little retweet when you see the post go up on thingy saying that. I've just remembered I haven't retweeted my own show this morning. Terrible, terrible. Right, have a good day, everybody. And as usual, we'll catch you tomorrow morning. Ali, the NFP competition will be coming out soon. And we may have a little bit of an extra surprise as a prize. So keep your eyes peeled for that on our Twitter account, ForexAnalytix. Have a good day, everyone. We'll see you tomorrow.